What's up, everybody? It's LG Doucette here. You're listening to The First Mint, a podcast where I talk about NFTs and the world of Web3. The podcast comes out every Monday morning and occasionally on Wednesdays. If you like this content and you want some more, feel free to visit our Twitter page at The First Mint. My guest today is Scott Melker, someone whose newsletter I honestly literally read every single day. He goes by the Wolf of All Streets, and he is somebody who's very committed to his craft. And before you get into the interview, what I will say is that what I really appreciate about chatting with Scott is how upfront he is about his losses. It's really hard, obviously, if you're somebody that a lot of people follow and they, watch your content, they want to know what you're trading. It's really hard. I would assume it's really hard to kind of come out and say, yeah, like, hey, I've lost millions of dollars because of things like Voyager and Luna and all the stuff that's gone down the last couple of months in crypto. But he says it straight up, and I really appreciate that in this conversation with Scott. I do ask him obviously about NFTs, but the main reason that I wanted to have him on is because he is, a big crypto trader. He talks mainly about the price of Bitcoin and the price of altcoins. You're going to hear his Bitcoin maximalism come through quite a lot in this interview. I wanted to have him on to talk about that kind of stuff and to tell us, us NFT degen people, and we all have some crypto, of course, but I wanted him to tell us, how he builds a portfolio, how he would start from scratch, how he would start in a bear market right now, where for many of us, our values are down quite a lot. Of course, we do end up talking about NFTs, and he does have some NFTs. He used to be a DJ, a pretty, I guess, big DJ, and he has some music NFTs, some artist NFTs from people that he knows. So he does have some interest there, but his interest is mainly in cryptocurrencies and their value and their use case in the world. So that's the main topic of conversation. He's very sharp, and I also appreciate that he's quite committed to what he does. He's all in or he's all out, and right now he is still all in on crypto. He is still waiting to see what is going to come next. So it's good conversation. I gave him context for his answers. I told him that most of us might be kind of new to trading, and maybe you've been trading for a long time. I don't know what you guys do in the shadows. But coming from an NFT perspective, NFTs are still brand new, especially in terms of being like some kind of real market. So I made sure that he understood that is the perspective we're coming from, that this is, for many of us, going to be our first real crypto bear winter market, and then use that as a starting point for everything else that he had to say in terms of how to build a crypto portfolio. So I hope you enjoyed my conversation with Scott Melker on The First Mint. Ladies and gentlemen of The First Mint, we have a very special treat for you today. Scott Melker, the Wolf of All Streets, one of my favorite content creators in the crypto space, one of the best follows on Twitter, and a newsletter that I read every day. Scott, also thank you for making it free every day. I'm sure a lot of people appreciate that. Scott, would love for you to kind of give us a bit of that origin story. It's something we ask for everybody, and I'm sure you get asked a lot, but somebody who's an expert like yourself, how did you get started in crypto? Are you a 2011 classic Bitcoin, 2014 classic Bitcoin? Where does that come from?
No, I started in 2016, and of course, I thought that I was extremely late, right? I was jealous of the 2014 guys who were jealous of the 2011 guys who were jealous of the 2010 guys, and I think that's the general sort of trajectory and mentality in the crypto space. But listen, I was a kid with very diverse interests, luckily, who had parents that at least taught me a bit of basic financial education. I started buying stocks when I was a young teenager at 13. But it was never really my main focus, to be honest. Music was always actually my passion. I went to the University of Pennsylvania, so I sort of had this superficial exposure at all times to financial markets because of the Wharton School and because everyone I was in school with intended to go to Wall Street in one way, shape, or form. So that's where I sort of started becoming a slightly more active trader and interested. But I pursued music, really, and a number of other sort of things on the winding path along the way for 20 years after that. It wasn't really until 2016 that I found crypto and started aggressively trading that asset class. I was trading Forex, options, of course, stocks before that, but always somewhat poorly with minimal success. To be quite frank, my investments always did better than my trades. And I came to crypto for the same reason that most people did at the beginning, if you're American, certainly, and you weren't forced in because of hyperinflation or something happening in your country. I came in to make more dollars, right? And I sort of backed into the importance of crypto as a use case, became more of a Bitcoin maximalist who was orange pilled. It's hard to call me a Bitcoin maximalist because I love all coins as well, but a really strong Bitcoin believer. And really, throughout time, just this organic shift to creating content and obsessively talking about the crypto space.
Well, that's you said so many things there. I need to unpack it. What was go all the way back? What was when you were a teenager? And what was the first stock that you bought? Like
Disney,
what was the first thing?
I'm Floridian, so I bought a share of Disney.
Oh shit! Nice.
Disney, Caterpillar, and Apple, I think, were the first three that I ever bought, or that somebody gifted me. I think when I was 13, my parents' friends gave me a share of Apple, something like that. Yeah.
Caterpillar, like the construction company.
Yeah, I thought the tractors were cool. Simple investment thesis. Front loaders and excavators are cool, right?
Oh man, that's awesome. It's I mean, I will say that children are obsessed with like any kind of construction vehicle. So it's like I'm assuming a young teen, maybe you still were. Transformers.
I wasn't. I don't think. I was into Transformers and stuff. I don't think I was still obsessed about it, but I think, as you said, it sort of lingered from childhood, and it was a recognizable brand that I saw all over town. You'd see these Caterpillar tractors, and bought some Caterpillar.
Man, that's awesome. And what was there a point in your teenage years where you had like your first okay, I bought some Disney stock, it pumped, and I'm out, and now I made myself like a couple $100 bucks.
I forgot that they existed. I bought them. I'm still holding, I think, those shares with certificates, those are things that I never sold. I've been through multiple splits, massive pumps. Now, adjusted for inflation, I probably didn't do as well as I think, but I've made thousands of multiples on those first stocks that I bought.
Wow, yeah, I bet, man. Yeah, okay, cool. Well, congrats, man. I think a lot of people wish they had a bit of that financial fortitude at a young age, whereas
don't worry, I have so many stories of losing much more than I ever made by doing that, so it's fine.
Well, I want to hear them at some point, but what I will say, it's like one of the use cases I always use for NFTs, talking to friends, I'm like, listen, I spent a lot of money on Pogs and other shit like that when I was a kid, and it's like if those were still NFTs in some way, maybe I could have some kind of return on at least maybe the rare ones today, but I don't even know what the Pogs are, because after a couple of years I thought they were worthless. So some people are buying Disney, some kids buy Disney stocks, some kids buy Magic cards. So.
I was also buying baseball cards obsessively, and it was the 80s, and that was when baseball cards became worth utterly nothing because they overprinted much. I learned my first inflation lessons by buying 87, 88, 89 Topps baseball cards. And so I was also doing that, if it makes you feel any better.
What was the grail? What was the grail at the time for you?
Well, listen, I never attained it. The grail at the time of my childhood collecting was when you always looked at the Beckett guide to see the price of a physical magazine. Of course, this is pre-internet. Yeah. And in 1952, Mickey Mantle, was worth thousands of dollars at that time when baseball cards were worth pennies. That was always it. But I never attained it. But I had a pretty robust collection. I loved Roger Maris. He had a business in my hometown. And so I collected all of his cards, including his rookie card, which I saved up forever for. Of course, the Ken Griffey Jr. Rookie card at the time. Dwight Gooden and the Mets at that time were huge. So the 86 Topps Gooden. Lots of them. Lots of cards.
If those came out as NFTs somehow, would you be interested? Or
in the classic ones, I don't know. Well, I still have the cards, to be quite frank with you. They're around. So I donated probably hundreds of thousands of baseball cards at one point. I walked in actually to a local store with like unopened wax boxes and sets of all these things from the 80s and 90s, and they literally told me to take it out front and burn it. They were like, we won't even take these from you for free because we wouldn't know what to do with them. So I went and donated them to a local charity. So kids could open, because I used to save unopened packs from the 80s that I thought would be worth so much and would be my retirement. I was wrong.
Oh man, that's eerily similar to some of the mentality we have on NBA Top Shot stuff. Unopened packs is like, I'm going to be rich if I hold these for a couple of years, but who knows?
You won't.
Who knows the fate there, man? Yeah, exactly. Sorry. You mean you don't want a Bruce Brown moment from the 2019-2020 season? You don't think that having that in a pack will be worth something?
No, and so I think that a lot of what I'm very bullish on NFTs for many use cases long term, but like with anything else collectible, 99.9% of it's going to be worth literally nothing. That's just reality. And, you know, as you talk about, maybe I would want an NFT of those original cards. I don't, because they don't have the same emotional attachment or legitimate scarcity. It's manufactured scarcity that those cards had by coming out at that actual time.
Got it. Yeah. What would you be doing, Scott? So you got to trading at a young age, right? And then you kind of you kind of glossed over the story, and now you trade full-time content creator. What you mentioned music. If you had an alt career, if you walked through a different door, would you be a full-time musician?
Well, I was a world traveling DJ for 20 years and producing music.
Oh, you were? Okay.
Artists. So that's what I did for 20 years.
So it is what you did. Okay.
A very passionate career in music. And I just sort of aged out of it. I had my daughter in 2015. I was on the road all the time. I had to go away literally 2 days after she was born. And that taught me a very hard lesson about not wanting to be a DJ dad on the road. So listen, maybe I would be more superficially still working in the music industry or doing something like that. I would have pursued, but I found trading, or at least found crypto, I think, at a very lucky and fortuitous time where, everyone was a genius in a bull market. If you found it in 2016, 2017, hopefully you locked in some money, and I was able to pursue that. And to be quite frank, I don't trade very much now at all, like almost none. I really went through the trading phase, made enough money that didn't really want to weather that stress and go through it. And I found kind of creating and talking about crypto to be more enriching. And that's sort of where the path has led.
Got it. Is there a third career that you envisioned? Is there some other thing from when you were a kid, like you would have, would you want to be a baseball player?
I was gonna say, when I was a kid, there was a few things I wanted to do. I thought that I would be like Jane Goodall and I would go live with the gorillas in the mist, right? So I was obsessed with gorillas, and I was actually an anthropology major in college. I thought that I would be Indiana Jones, so I had a specialty in archaeology, anthropology in college. I loved all that stuff, and of course I was going to be an astronaut, right? I went to space camp when I was a kid. My father actually, even though he was an academic physician at the University of Florida, which means he worked for the university, he was never in private practice or, getting paid like people I think imagine doctors do. They got the contract to be the physicians for the space shuttle program. So when I was a kid, my dad was the doctor who would go down and prep the astronauts for the shuttle launches, and we get to go with them. So I was obsessed with space.
Oh yeah, of course. Yeah, it was local for you. I have seen a shuttle launch in Florida. That's awesome. I did see that once. We stayed at that motel across the swamp or whatever.
Yep.
Yeah, we stayed there. Our parents were very kind like that. Took us on some really, really cool stuff. So I know what you're talking about, man. I have a lot of I have a similar vein. I have a lot of space tattoos and shit.
Oh, awesome.
So, yeah, there you go. Yeah, so there we go. Yeah, we maybe one day we'll both be astronauts in an old life.
Never know.
Yeah, you never know.
We might all have to be astronauts off this godforsaken planet by then. So
we'll. Okay, so let's talk. A couple things we want to chat about today, Scott. I want to chat about. I want you to tell us a little bit more about your time as a trader and kind of specifically on the emotional side, because I think we have a lot of people in our community, honestly, that are now considering being some kind of NFT trader. We're in a bear market. Maybe they traded for the last year and now they're starting to come out of it, but they're looking for whether this is something they want to keep doing or if they want to take a nice long break. I want to chat about that. I want to chat about your life as a content creator, because I want to learn a little bit more from you. And then obviously we want to talk, a little bit more in depth NFTs and portfolio building stuff that you're keen on right now. So while we're kind of chatting a bit of nostalgia, tell us about your time from 2016, your genius in the bull market. Tell us about the highs and lows there and kind of your journey and what you've learned in the last 6 years in terms of, managing yourself and managing that. Because before you answer, I know I ask questions like this where it's like a 2-minute question. I get a lot from your newsletter. I think your newsletter is fantastic, and I love your the most valuable part to me is the first couple paragraphs where you're giving that emotional vibe of hey, here's how I feel right now. Here's how most of you might be feeling. This is kind of where my head's at, and I think that that's something we don't get enough of in crypto. Something we don't talk about enough especially in NFTs, where it's just hey, come buy the worst possible rug pull project. It's we don't really. There's not enough discourse, I find, from the kind of, keep yourself in check, keep yourself level, keep your friends level, right? So very broad question there. Tell us when you were a more active trader, What was that like, and how did you learn to manage yourself?
For me, you touched on a lot of it there, actually. I think first you have to identify your emotional state so that you can sort of eliminate it from your trading. And when you sit down at your desk, you can be hyper focused and really, it's kind of like being a poker player, right? Stack management and not being emotionally attached to winning and losing, understanding that it's not about winning and losing, it's just about slowly plodding forward and making small gains. And then every once in a while hitting that home run that really makes your portfolio for the year. But as you said, I learned over time, and it took me a very long time and a lot of losses. I think I lost so much that I eventually was just like, this sucks. I need to find a way to not lose if I'm going to continue doing this. I hate losing. What are the steps I need to take to do that? So I think it's very important. The thing that's least talked about is that your life outside of trading is probably more important than your actual trading routine. I think that at crypto, the casino's open 24/7, 365, and burnout is guaranteed if you try to obsessively trade this market. NFT, altcoin, Bitcoin, or otherwise. How much you go to the gym, how much time you spend with your family, how much time you don't look at your phone. Like I have a rule, I do not bring my phone in my bedroom. So at night, if I go to turn it in and watch TV or whatever, my phone is gone. So I'm not even paying attention to the market at least, 10, 11 hours a day by the time I've netted all those things. I go play golf. I don't look at my phone if I go to play golf, something like that. As far as the actual trading routine, never do it on your phone. Always have sort of set rules about how you do it. Be sitting at your computer in your workspace. Treat it like a job. There's so many of them I can't begin to tell you. But I think at the end of the day, it's really about detaching, I should say, your ego, and realizing that being wrong and losing are completely irrelevant in trading. If you can forgive yourself for being wrong, and by the way, wrong, right, who cares? You're literally looking at a chart or taking a wild guess at what's going to go up or go down. So at the end of the day, it's about managing your risks, small losses and bigger wins. That's all it is. You can take 8 out of 10 losses and still be a profitable trader if your system is good enough, right? And so I think most people get in trouble when they're revenge trading or they refuse to be wrong. You move your stop loss down because you're afraid price is going to bounce at that exact moment. You're emotionally attached to your pudgy penguin or your turned up turtle, and you think it's a part of your life identity as opposed to just some stupid shit that you need to get out of. It's a hot potato, right? And I think at the end of the day, it's realizing what you're there for, which is to make money. If you're trading, it's to make money. If you're investing, go ahead and get your deep emotional attachment and do whatever you're going to do. But if you're trading, it's just about letting your runners run and cutting your losers really fast and accepting you're wrong as fast as humanly possible and doing it like a robot.
Scott, what I like about the way that you talk about this stuff is how confident you are. Honestly, like you can recite just so quickly and so eloquently your rules of just like, okay, this is the kind of stuff I'm trading. Here's how I approach it. Investing, this is how I do it. Is that confidence, like, is that something you've developed over time? And I guess maybe what I'm really asking you is, for me, as like a person that's new and I'm trying to figure out like what's investing, what's trading, what I want to, which NFT I want to hold to my grave, and what stuff that I'm like, I can't wait for this to 10x and to get out or whatever. How do I develop those rules? Because I got to tell you right now that it's like being in NFTs, it's the market is so volatile that it's like you mint something one day and you're paying $200 for it, and then 3 days later it might be worth like 30 grand. And that's something that it's like in stocks is like, that's not really something that happens in that same velocity. And maybe in crypto, for cryptocurrencies, maybe it's something that does happen. For NFTs, it's like, how can we as people that collect NFTs and sometimes are really keen on, hey, like I want to own this one because it's cool, but then 2 days later it might be worth like a 30x. How are we supposed to develop that confidence in that and those rules for ourselves, right? Like that's kind of where I'm at, where I'm like, okay, I like the way Scott speaks about how he does things, and he's clearly, a veteran at doing this, but how can I ever begin to shape that for myself?
It took me decades, man. Like I was a complete emotional spaz and disaster for most of my quote unquote trading career and for most of my life. I think a lot of it just comes with maturity and time, right? So it's not something that I would have ever developed in a year or two, as you said. Also, I've never really aggressively flipped NFTs. Like when I'm trading stocks or Bitcoin or altcoins, I think there's a much easier approach that doesn't exist in NFTs because everything's effectively fractionalized, right? If I bought 1,000 of a coin and it goes up 30x, I can just sell half, right? And still have the emotional attachment, if that's what it is, to the other half of the position, ride it if it's going to go to the moon, but also guarantee that I've taken profit. The thing that I don't like about flipping NFTs and that doesn't work for me within my system is that it's an all or nothing proposition every time. Unless, of course, you've minted 10, then go ahead and sell 7. But of course, then you're like, which ones are going to be the 3 worth keeping? There's just a whole other layer, I think, of complexity and decision making that I have not developed for NFT flipping. So I feel for you. I don't know how you do that because it is art, right? And my dad once told me, never buy art as an investment, only buy it if you can stand to look at it for the rest of your life, right? And so that lesson sort of stuck with me. I still view NFTs as art. So I've just never bought anything that I didn't actually want, and so I've never flipped them.
All right, that's fair. Yeah, I guess we're still pretty nascent here, so it's going to be up to us to kind of develop our own rules there.
Yeah, but I would just say that it comes with time and comes with repetitive practices. You need to decide what your system is and then try it for 6 months and then tweak it. It just really takes time. You can't test a system in a day or 2 days. It's over. The success of a trader is determined over decades and thousands and tens of thousands. You see all these people. You see it. I mean, Three Arrows Capital, the biggest funds in crypto, are exploding. All those guys were the darlings and geniuses of the bull market, and one bear market hits and they're gone, right? So that's the reality, is that most of these people you see on Twitter, myself for a very long time included, yeah, you're all genius in the bull market, as I said. Everybody looks like they can't miss. Well, when everything's going up and you post predictions that things are going to go up, until the music stops, you look great. But when it goes down and you don't have a plan and you get washed out, it only takes, one bad trade to eliminate your gains from years if you perform.
How do you manage probably the biggest thing that's happened to, I would say, our community, let's put it, to not make it sound like it's too much just me, is at the first week of May, things started going down, right? The numbers started going down, and mid-June, it really cratered. And I mean specifically NFTs. You had things like apes and mutants and all that go down, get cut down 20% of their worth. And I think the biggest shock for many people was, looking at that portfolio value and thinking that's money we had, and it's not, right? That's that is one of the most basic rules of investing and trading is listen, if you're gonna look at that number, you're going to be in big trouble if you start making plans with that money and you don't have it yet. But again, how do that's something that I think a lot of people are at least for me personally as well, is we're looking to develop that emotional side of okay, I should have been colder and clearer cut with my rules for what I was doing with these JPEGs. It's just tough because I've never been in this position.
You always have to take profit. You do always have to take profit on the way up, but acting like you would have had this sort of perfect timing to sell everything at the exact top. By the way, you would have paid, if you were me, 40% taxes for doing that anyways. So you'd have to be predicting, which we've had, but a 40% drawdown just to effectively get even on that, right? So there's a lot of factors that go into it. I talk about this all the time. It's sort of a great experiment, a thought experiment. If you ask people, say you had a portfolio that was $100 grand, right? Last year. Goes up to $1 million in paper value, right? You don't sell anything, and now it's 150 grand. And you can literally binary say to people, did you make money or did you lose money? And a lot of people will say they lost money. Even though they're up 50% on their initial investment in a year or 2 years or whatever it is, they're going to always look at that perfect number. And comparing yourself to the best outcome at all times not only destroys you mentally, but it's also extremely disingenuous, because it implies that you would be perfect. And we've already talked about the fact that in trading, the goal is not to be perfect, the goal is to be profitable. So it assumes that you would have literally sold every single thing at the perfect time, and then further assumes that now, on the way down, you will perfectly time the bottom and put all that money right back into the market, right? So it's a dishonest self-exercise, and you have to be self-aware that there's not a person on the planet who trades perfectly or who sold everything at the dead top. And even if they did sell everything at the dead top, by the way, if they never re-enter the market and the market ends up going higher, they're still wrong, right? So they're right now, right? That's why the holders and investors tend to win over time, because if Bitcoin goes to $100,000 now and everything rips and everybody's up higher than that all-time high of their portfolio, now you'll feel like an idiot if you had sold and you were perfect.
Yeah. Okay, so that's great advice and great context for that. So thank you. Let's chat specifically about like building a cryptocurrency portfolio, right? Because that is very much where I'm like, you're an expert in many things, but that's the part that, I really take from a lot of your content is like, okay, well, here's what's important to you, and obviously it's not financial advice. Everybody makes their own decisions here, but I think a lot of people now are thinking, they're bullish on blockchain, they're bullish on crypto. You had a fantastic tweet I think yesterday that was like, the altcoins and the big hits of the next bull run don't even exist yet, right? So for people who are like, okay, I'm going to liquidate X, I'm going to keep this much as, let's say, investment. I just want to hold this, and this is X amount of my portfolio overall, my net worth is going to be this much in crypto. Where do they start to build that, right? And what coins are we looking at? How much are they allocating to the things like Bitcoin and ETH versus some altcoins that they have good vibes about? What does that look like? How do you start?
I mean, there's some standard approaches as to how a portfolio in any market should be structured, right? And I think the way that I learned it originally was 70%, if you're going to trade at all, by the way. 70% should be in long-term investments. You can determine what you believe a long-term investment is. For crypto, I believe that should be Bitcoin and Ethereum, and maybe very small positions in other things. 15% for being a degenerate, right? For trading, basically you're writing that 15% off, right? But trading, low caps, all those things, most people would say that NFTs is in that bucket, right? And 15% in cash. In my case, it was USDC earning yield, which has now evaporated from the planet Earth, apparently, with some of these platforms that have gone down, right? Which I've talked about quite at length. So that was, I guess, poor risk management on not understanding the full breadth of counterparty risk on my part. But for a while, 15% cash, which was parked on these platforms, earning yield. Now, you need to have cash because you can't buy a dip if you don't have cash, right? And so if you're going to dollar cost average, you need to be using cash to do it. If you're going to buy dips, you need to be using cash to do it. Also, you have this sort of unique situation where if your goal is to stack more Bitcoin or to earn more crypto, cash actually rises in crypto value when crypto prices fall, right? So if you have 15% in cash and your goal is to stack sats, when Bitcoin drops, the buying power of your cash versus Bitcoin actually rises and saves the Bitcoin value to a degree of your portfolio. Lot to unpack there, but so 70, 15, 15. Now, that's very basic. When the market conditions change, I will ratchet that 15% up that I'm doing degenerate things with dramatically. If we're in a full-blown alt season, I'll be dipping hard into that investment stack and transferring that over to trade or invest in other things with. Also, that 70% stack started for me as Bitcoin and then Ethereum, the primary focus on Bitcoin. But as I had these sort of monster successful trades over the years, I would always keep 10, 20%, that last sort of bit that I haven't sold off as a moon bag, move it into the investments, wait 10 years and see if it becomes the next Amazon, which it won't, but you get the idea, right? And so I think that your portfolio builds itself over time. It's just very important and very difficult for people to rebalance, right? If you're going to rebalance quarterly or every 6 months, it forces you to sell something to get back into that 15% cash. And it forces you to sell something to take things that you were identifying as trades, if you're being honest with yourself, and moving them into the sort of investment bucket.
Well, how do you that's great advice. That's the 17, 15, 15 is a great way to look at it. Speaking about something like altcoins, how do you like, I had briefly paid attention in 2017, 18, and I remember just the amount of shit coins that came and died and everything. And now this time around, I've been I've been in the market for about 2 years, and I've been learning about, I was lucky to get in on like the Uniswap airdrop and stuff like that, right? So I kind of have a general understanding.
I'm still
What's that?
holding that. I'm still holding my Uniswap airdrop.
And I've kind of learned about some of those, maybe like the top 20 or 50 of coins, let's say. How do I start to identify altcoins that are for me?
It's really hard, man. It's really hard. And so the bear market, by the way, is the time to do that research, right? If you can turn off the charts and stop obsessing endlessly over what's going to happen, we might be here a while. So it's a waste of your energy to be staring at charts and to be sort of trying to plot what trades you're going to make when you know that the market's just chopping sideways on a general downward trajectory. Right. Not the ideal time. So now's the time to dig into those things, figure out what you like, what you care about, come up with a premise, right? My premise that served me very well, that I've shared many, many times, if you're new, and you're not going to go way down that sort of risk curve, or you're not going to do research on 19,000 coins, right? Is just invest in the base layers, right? Invest in the layer ones that will benefit from whatever happens in all these sort of more nascent and smaller buckets. If you own Ethereum, Solana, maybe Matic, if you're looking for sort of solutions that make these blockchains more scalable, AVAX, Elrond, some people would say Cardano, choose your layer one, doesn't matter, right? If NFTs explode on Solana, you may not own those NFTs, but at least you'll get the benefit of the underlying adoption of that blockchain. If metaverse explodes on a different chain, or if DeFi explodes on a different chain, you'll get the benefits of those, although much smaller, but at least you'll be invested sort of in the base layers that everything is being built on. So I think that that's a very good place to start if you're new, is just sort of gain exposure to these layer ones. After that, I would say, well, layer ones obviously all kind of suck at scale. I think we've learned that, right? Solana is supposed to be the fastest, greatest thing, and it's like offline, once a month for 5 to 6 hours, something like that. Not ideal. So start focusing on things that offer scaling solutions, ZK rollups, optimistic rollups, Matic, Polygon, basically things like that, and competitors. Start to think about what Bitcoin crypto market looks like in 5 years or in 10 years, and what tools will need to be built to make that happen. Because 99.9% of this stuff that's not building something fundamental is going, and this isn't necessarily a bad thing. It's sort of like the internet boom and bust of the late 90s, early 2000s. It advances the ball. It helps the industry. But if you're just like putting all your money into a project that there's 30 projects trying to solve, and maybe it's not even a problem that needs a blockchain or needs to be solved, you're probably going to end up losing your money. It's really, I think, important to be able to identify those things. But I would just say, don't go even far down the risk curve. Don't be like lulled in by 100x gains and things like that, because you're probably not going to hit. You're probably just going to end up a passionate community member who's bag holding, wearing a shitcoin t-shirt, right? And talking about how it's the future, and it never goes.
What factors should we look at, Scott, right? And obviously right now, we're in the macro, and there's potential for more rate hikes and all that kind of stuff. What I think that's the kind of stuff that maybe some of us weren't aware of, because a lot of us maybe dollar cost average into some kind of retirement plan, right? And it's just something like that. But it's something that now, if we want to be more active in crypto, and we want to, like you're saying, do some research, take advantage of the bear market, be ready for the next bull run kind of thing. What factors impact crypto prices the most in your experience?
FOMO, emotions, fear and greed, right? And so you ask where you should start. And I think that there's incredible content creators all over the place in this space. But there's also just very, if you're into on-chain, you can go check out Glassnode or Into the Block or one of these, and really start to get research from people who understand what they're doing. Obviously, once you go down the influencer pathway, it's very hard to differentiate what's maybe quality or more reasonable information and what's just, outright, FOMO-inducing insane content. Like, if every video by someone that you love is what's the next altcoin that's going to 100x and we're in a bear market, maybe just tune that out until it's a bull market and that it has value again, So listen, I think it's very hard to find that really high quality content. All of us are guilty of, clickbait here and there, and saying things that maybe weren't true 6 months later, being wrong. Like I said, you take the mentality of being a trader and accepting that you're wrong. Well, now be wrong all the time in a public forum, which is what you're doing if you're putting yourself out there talking about market predictions and what's happening. But I think at the end of the day, you just have to find your own platforms, your own research, Cointelegraph, CoinDesk, read the news every day, keep up with what's going on in the market. And as you touched on before, this is even the first time really since I've been in this space that the macro matters a hell of a lot more than anything that's happening in this space, right? You just don't fight the Fed, bottom line, And so if they're going to keep hiking, it's going to be very, very unlikely. And listen, I was one of the people saying for a very long time that Bitcoin was this beautifully uncorrelated asset, and it was. Well, now it's not. I wasn't wrong. Things change. There's new information, and so you adjust to it. People have, I think, a hard problem with that. You've read the newsletter. I often say, strong opinions loosely held. And I think that that's the way to approach markets is you have to formulate your strong opinion and be confident, but you have to also be willing to pivot when the time comes and your thesis is proven wrong.
That is a fantastic like one liner right there and very true, right? Because that's something even I've naturally in social circles now I've become the crypto guy, the NFT guy, and I'm like, I don't know anything. Like I can explain to you some easy analogies to help you understand NFTs, but like people are like, is it like where should I put 150 grand right now? And I'm like, don't X, like I'm not going to say anything after you ask me that question. But then another question that comes up is like, wasn't crypto supposed to be this hedge against all of this shit, right? Like, it wasn't that the whole point? And now if it's just going to move with the rest of the market, what are we even doing, right? So, but
yeah, it's a tough question. Yeah, but I think that it's disingenuous to say that it hasn't been a hedge. It's just not a hedge in the United States where we don't need Bitcoin in the same way they do in other places in the world. If you live in Venezuela right now, Bitcoin is certainly an excellent hedge against hyperinflation, right? So it is an inflation hedge. It's just not an inflation hedge in a market where we have institutions that are buying and selling and trading Bitcoin just like they are any other stock or asset. Kind of get what you wish for with institutional adoption, right? You want institutions to adopt it in the same way that MicroStrategy did, put it on their balance sheet, view it as a long-term investment. You don't necessarily want to cheer for hedge funds who have a bottom line in quarterly earnings and are willing to drop it the second that they need liquidity. That's not who we want here, and that's what we've become obviously a victim of. And it's 24/7. So on Saturday when they're panicking and shitting their pants, they can go ahead and sell their Bitcoin when they can't sell their Tesla stock, right? So it's a very unfortunate place to be in. But yes, I would say that the premise that Bitcoin is an inflation hedge right now is false, but inflation raged from March 2020 until the Fed started tightening, and that's when Bitcoin went from $4,000 to $69,000. So it just depends on what lens you sort of view it through. But yeah, listen, it's a nascent industry, and there's a lot of use cases that we talk about that have not yet fully panned out, but that doesn't mean they won't.
Right.
Right?
Yeah. Zoom out, as they would say. Right. Speaking of content creation, Scott, I did want to ask you, like you crank out the newsletter every single day. What, like, and I need some personal inspiration here. How like what is your process? Take us through the day of Scott Melker and how you are formulating concise thoughts that you're putting out there, because it's hard to put yourself out there. It's not easy, putting out writing tweets, writing newsletters that people are really going to maybe hang on to a lot.
It actually somewhat sucks right now, to be quite honest. Like for the first time, I wake up some days and I'm like, I don't know, man. And listen, I get myself, it's kind of like prepping for a game or something. There's days where I was an athlete as a kid. There's days where you don't feel so up to playing, but you get there, and the adrenaline kicks in or whatever it is, and you find your prep routine. So, I mean, for me, I start planning generally a day or two in advance, kind of to frame it out, to give myself a bit of breathing room if I wake up in the morning and don't have some inspired idea, or something like that. But honestly, usually the news gives me something to talk about on a regular basis, or there's something that I read and I'm like, well, that was really stupid. Let me talk about why that's stupid and not even talk about the news, right? So it gives you this sort of nugget. I mean, I really, really, really love this space. And I really love talking about it, and I'm really hyper-focused on it. That's how I was with music for all those years. Interestingly, I have not touched a turntable in years, and it's what I did passionately for decades, right? The minute I turned something off and go on to something else, it was the same with my Twitter account. I had 40,000 followers who liked my music. One day I never talked about music again. I just started posting ugly charts and I lost half my followers, right? I went down to 20,000 and somehow rebuilt sort of in this other industry. But all I talked about obsessively was crypto, regardless of who my followers are or what they wanted to hear. So like, I don't know. I feel like it's inspired to know that people are waiting for that content, that people are reading it, that people are engaging with it passionately. But listen, some days you have to just come up with something because there's not that much to talk about, especially in the bear market. It's like, same stories over and over again, and finding a new way to skin it, a new lesson. So really, sometimes you'll see, like, my content is kind of crypto, but kind of just more, like you've said, psychology or emotion or just what I'm thinking about on that day. But I think, man, once you've committed and you have an audience, you just have to show up.
Absolutely.
It's the bottom line. You just show up because it's your job and there's people counting on you.
You love the industry Tell me a little bit more about that. What do you love? Like what's driving that?
Well, my conviction has been shaken, to be
Yeah.
quite frank, right? At the very basic core of it, I love Bitcoin, right? And so that's why I sort of joked you, Bitcoin maximalist who also touches all this other stuff. But I view it as Bitcoin first, and everything else is sort of like a speculative venture capital investment, which can be incredible, and that's where the bigger gains are to be made. But for all the various reasons we don't need to go into because everybody's sorted through it, Bitcoin, I believe, is the most important asset that's ever been created, and that given time will literally save people's lives and could in the future become the most essential asset in anyone's portfolio or in their life, right? Hedging against inflation, money printing, bad government behavior, portability. If ever you're at the border and you're fleeing your country, they take your gold, but your seed phrase is in your mind. Deflationary, all the millions of reasons that you've heard why Bitcoin is superior, right? And everything else is sort of like an offshoot of that. Now, I will say, I was very passionate about a lot of these platforms, about a lot of the things that were being built, and I've taken an absolute bath as a result of it, right? I've made no secret that I'm, out millions of dollars on platforms like Voyager that I was using sort of as my own bank account and recommended to family and friends who also have assets sort of frozen and in limbo. That sucks really bad. I don't think that I will be aggressively promoting centralized finance platforms and crypto to my friends and family moving forward, and I don't think that I will personally be parking millions of dollars on them to earn yield, right? The chase for yield, I think I was very wrong about, and so was everybody else, right? And that has largely caused a contagion in the industry. So right now is sort of a time when, taking it back to the first principles, I think, of why these coins and assets really matter and figuring out which ones actually do matter and which ones maybe like I was just caught up in the hype of something that didn't need a blockchain and, they can take a hike. So it's a rough time, I think, for anyone who's been in this space for a long time because you have to look at, and listen, the Bitcoin maximalists are right now, right? They love to do the I told you so dance. These things went down and they're all scam. And then they'll be wrong in the next bull market, right? You touched on my tweet earlier where I said I believe, I'm trying to remember.
Well,
the
I've got
the
it. I've got it.
strongest
I'll read
assets
it
of
to you.
the next. Yeah, you read it to me because I left out a word that was very unintentional, but kind
The
of funny.
strongest coins of the next bull cycle probably don't exist yet.
Now, what I meant was the strongest performing coins of the next cycle as a function of price and not of fundamentals. So that tweet triggered people everywhere for whatever reason, because of course the Bitcoin maximalist said, yeah, you're talking about all the scams that are going to come, but the strongest will always be Bitcoin, Ethereum. I actually agree with that, right? I'm not saying scams, but I agree that the strongest, if we're talking about fundamentally, are Bitcoin, Ethereum, and then down to the larger market caps and ones that have proven themselves. But I was making a point about strongest performing, right? Like if you held I bought XRP for like a penny. Right. And in that 2000 TRX, fractions of a penny. I mean, these were the best trades I ever had, was luckily buying all these things when they came out. And then it went over $1, like $2, whatever the prices were. Insane. But nobody they have their communities, but like you're not passionately thinking, oh my God, XRP is going to be the big winner of the 2027 bull run. I'm not saying that'll be the next one, but right. And so we had Solana summer and we had DeFi summer and we had NFT summer. So maybe it's the stuff that hasn't come out yet and isn't popular yet. Generally, listen, this is how it works. If you're talking about trading and investing in the crypto space, even if something has done exceptionally well in the past, it can still do great, but there's a lot more friction, right? Because if you bought Solana at $150, $100, and it's now, I don't know, $30, something like that, right? In the 30s, as we're talking. Well, you're going to be a lot more inclined to sell that at $100 when you finally get even, or to take what you can, than a brand new coin that hasn't really seen that sort of depression, doesn't have that overhead supply, right? It's all supply and demand. And any coin that's experienced the bear market just has a lot of people that are looking to sell at various prices. Right. So I think that there's going to be always new innovation in this space. There's going to be new hyped things, and they're going to be the ones that rise the farthest. not a function of their actual value, just of the price and the structure of how humans work when it comes to
I
markets.
saw your quote tweet your own tweet about triggering so many people from so many communities.
Yeah, I mean, it was really fun to watch the responses. People get so mad at me. It's really remarkable to see. Like, I'm sorry if that tweet was so upsetting. It's
That's
true,
okay,
though.
man. We're getting to the end here, Scott. Let's talk. Let's chat NFTs. Do you have many NFTs?
I don't have that many, but the few that I do have, like I said, I view sort of as long-term investments or supporting, artists that I actually love. I really do view NFTs in that regard. Now, listen, we could do a whole podcast on the millions of amazing utilities for future utility of NFTs that I believe in, that I believed in long before they even became PFPs and art, right? I mean, like your mortgage and your car title and your, deeds to things and medical records and the millions of things that NFTs can be used for. For tokenizing everything, tokenizing stocks. I mean, imagine if you didn't have 48-hour clearing for stocks, right? But I mean, like I'm very good friends with Micah Johnson, the creator of Aku. So I own everything Aku in many multiples, Akutars and the original chapters and all of that. And I've bought them all. Those are the only drops in my life I've ever showed up for and would like passionately be there at 2 p.m. on a Friday, like everyone else, trying to get my hands on a drop. Otherwise, I've never really done that. I own, a Trevor Jones, and right across where you can't see on the wall, I have actually physically one of his paintings, right? And so to me, like I love his art, him as a person, so I supported by doing that. And otherwise, a few random things here and there that somebody said, buy this, buy that. And listen, everything that I ever bought because someone told me like this was the next big thing is worth literally dirt. MEV Army was one of them, Blau, like he was like, it was my brother, like buy these things. And my friend who ran an NFT fund was like, these will be the next big things. It's Blau's brother. I love Blau, by the way. And I'm not saying, listen, this is every NFT and maybe they'll go way back up. But like, yeah, I was like, he's his brother. There's going to be, cool. Right. So I never bought an ape. I almost pulled the trigger on an ape not that long ago. And then I actually couldn't, because of some of these platform issues, couldn't get access to a lot of my Ethereum. So I just passed. And otherwise, not really that much. That's not, like I said, it's not a criticism of the industry. I just don't understand it well enough to put a lot of my money into it. And if I'm going to invest in crypto, I have core competency in other areas where I feel much more confident, right? I have friends who never invested in Bitcoin, who are like Wall Street guys and stuff, who found NBA Top Shot, like I know was sort of your, origin story, and fell down the NFT rabbit hole and never really even viewed it as crypto, right? They're just NFTs as its sort of own thing. Just I never got there.
Got it. Yeah. I'd love to know, just from your perspective, having been in this for 6 years now, this current, this bull run that just ended was like that was kind of like the true coming up of NFTs, right? There's Crypto Kitties a long time ago, but this was like, okay, like apes, there's like Ape Fest and shit, like, Eminem is making an ape music video, that's pretty mainstream. What can you tell me, like, from your perspective, right? It's like you're looking at, you're looking at charts or reading the news. What was that like 0 to 100 vibe in NFTs? You know what I mean? Like how much of
It shocked
crypto
me.
is NFT talk and NFT like I know we can look at the numbers of the market caps, but I mean just like, how much has it come to occupy the space in a sense?
I think last summer. I think it like almost entirely consumed
Yeah.
the space. It's really crazy. I don't think that's the case
No.
anymore at all, to be quite frank. I think that that's what I described earlier. We've had DeFi summer and NFT summer and metaverse fall last year. Remember, everyone was buying everything metaverse because Facebook rebranded to Meta. We've seen, listen, we like people, not myself, because sort of same approach I had NFTs, but like people were yield farming coins named after random foods and thought that was a legitimate investing strategy, right? Yams and whatever, and so like, it's hard to see a bubble when you're in it. NFTs were in a massive bubble last year. There's no question, right? Did I expect to see a Saturday Night Live skit on NFTs within 2 or 3 months of them becoming popular? Absolutely not. But just like Elon Musk going on Saturday Night Live and people thinking that was going to send Doge to $1 was the clearest top signal in history. When you saw that much mainstream adoption of NFTs, I'm not saying it was a top signal for NFTs long term, but it was a top signal for people buying literally anything just because it was an NFT and FOMOing in, and that 99% of that, like any bubble, was going to basically go to zero. Listen, but like you're super psyched if you minted an ape or you've owned a punk or, there's a lot of projects out there that have held their value exceptionally well if you got some peoples, right? And I think we're going to see a whole new resurgence of NFTs doing exceptionally well in the next bull run. But like, listen, man, when you're worried about paying your rent or, it's so funny. Let me start here. We always say, only invest what you can afford to lose, right? The greatest meme of all time. Because A, most people can't afford to lose jack shit. And B, what you can afford to lose at a given moment is not necessarily what you can afford to lose when shit really goes bad, right? And so what you like, if you didn't know that gas prices were going to be twice as much and that your food was going to cost 30% more, well, what you could afford to lose a year ago is not what you can afford to lose now, right? So it makes it very hard to sort of decide what to invest in or how to invest in it with any long-term perspective, right? So you say like only invest what you can afford to lose. Well, now I can't afford to lose the money that I thought I could afford to lose a year ago, right? For me, like my portfolio, I have no qualms saying it. I'm a holder in general. I invested in a whole lot of stuff that, I was willing to hold for the long term because they were sort of like VC or speculative investments. My portfolio is down over 80%. And then I had what was left basically just ripped from under me on one of these platforms. I have a lot in cold storage and stuff, but you get the idea, right? And so not a good time. And so it's very hard to manage risk in this space. But I do believe that when we see another bull run, it's going to be massive. But the reason we don't now is because if you have a bunch of money in NFTs, you need to pay your rent, you sell your NFTs, right? And so we're in a liquidity crunch here, in a bear market, prices of things are going up, and people have to sell shit. Bitcoin, NFTs, Ethereum, stocks, houses, cars, whatever it is. People have real world problems now that didn't exist when we were all FOMOing into pudgy penguins or a year ago or whatever, right? I didn't, but you know. And so, like, listen, come on, man. Like, Bored Apes are cool, but like, then coming up with 200 things that are like alliterative or rhyming names of animals is fucking as stupid as it gets. And I know that's going to trigger maybe you, I don't know, other people in your space. And I've been down these paths too. I've invested in coins that are like, I look back and I'm like, that was the dumbest idea. Like, why would I have ever thrown my money at that? But in hindsight, it's so easy to go back and be like a lazy lion or a douchebag duck or I don't know. I don't even know what these things are called. Turned up turtle, right? Whatever they were, there was no way that was ever going to have any value.
Dude, you could have a side career as coming up with fake NFT projects. Because you're good. Douchebag duck.
Dude, I could do this
Douchebag duck sounds like the new goblins or something like that. That's going to be the hottest thing next week.
Come on, man. Goblins. People literally go on Twitter Spaces and spend their actual valuable, scarce time listening to someone talk gibberish.
I will say,
I'm 45 years old.
Scott,
I'm 45 years old. Listen, I sound like my parents. I sound like my parents.
You're totally right. What I will say that I appreciate about that, I was like, okay, there's something that's kind of like performance art about this that I'm like, okay, there's something here. It's something different.
For 5 seconds.
It's something.
That was funny.
We're talking about it.
Okay, listen, I'll give it to you. Like I said, I hear myself all the time with the crypto space now, and I'm like my parents. Like, your rap music they're not talking about anything. Our music, Bob Dylan was poetry, right? Come on, man. Biggie's poetry. All right? Now I talk about how shitty, like, new rap music is, and they're all mumbling, and I'm now like my parents, right? And I'm probably that way talking about, like, you get to a certain age, and you're just not going to get it. I don't care who you are. Right. And so maybe some of this is just stuff that I don't get, but I'm willing to admit that I just don't get it and not throw my money at it as a result.
Yeah, that's okay. The strong conviction. So at least you know it's not for you. We'll put it that way. Scott, we've come to the end of the show, and at the end of every show in the first minute, we play a little game called Would You Rather. Okay. And it's really simple.
Okay.
You know how it works. And I only have 2 questions for you on this one. Okay. So,
okay.
Scott, would you rather a 1 of 1 It is the for some reason they've decided MLB has decided these are the most important. Forget all your cards, all that shit. Would you rather a one of one, Roger Maris or Mickey Mantle?
Oh God, Mickey Mantle, just because of value, even though I would have more of an emotional attachment to the Roger Maris, I think that the Mickey Mantle would be worth more.
Okay, all right, yeah, that's fair. I figured that's what you say. That was the warm up one. This is the real question for you. Would you rather you're okay? Let's like set the stage. You're done with crypto. You wake up tomorrow and you're like, fuck crypto, it's stupid. I'm done. I'm out. I'm
Could happen.
time career number 3. You're DJ and then you're a crypto guy, and now it's career number 3. Would you rather career number 3 is you star at Disney World in the Indiana Jones like stage play, which I don't know if they still have that, but I remember when I was a kid they had
They
it.
did it. They used to have it at MGM Studios as a kid, which is now Hollywood Studios.
It's still there.
It's
So
still there.
you play Indiana Jones and they pay you in Disney stock. Okay, that's that, or that you have to go to like Rwanda or wherever Jane Goodall is, that wherever her the main gorilla, the main area where they need people to help the gorillas. You go there and they pay you, and you're going to take care of the gorillas. You're going to hang with the gorillas, and they pay you an ape coin.
I would do the latter. And honestly, to be quite frank, I would pay to do the latter and not be concerned about the amount. So I think that if I was given the opportunity to revisit that sort of childhood dream, I've gone on archaeological digs and done those things, and it's a lot more boring than they make it out to be in Indiana Jones. I was the American guy on this archaeological dig, and nobody else spoke English, so I just basically moved boulders instead of digging for things, but in a wheelbarrow. But yeah, I would do the latter because one is pretending to do something that I was passionate about, and the other one is actually doing it. And I don't even think, like I said, I don't even think the payment is an issue. I think that at this point in my life, assuming I'm solvent, I would pay to go live with gorillas probably in Africa if my kids were gone and I could actually take the time to do that.
Awesome. Great answers. Scott Melker, thank you so much, man, for coming on the show.
Thank you, man. I really appreciate it.
That is going to do it for us today, folks. Hope you enjoyed that interview. Hit us up on Twitter. Let us know what you thought. Don't forget, these interviews also come in newsletter form. You can find it on our Substack. It'll be linked on our Twitter. So thanks for listening, and we'll see you next time on The First Mint.